Most people think investing is only for the rich, that you need thousands of dollars just to get started. But honestly, that belief is exactly what keeps a lot of people from building wealth. Today on Financial Essentials, I'm going to show you how you can start investing with just $50. And more importantly, why taking that first step matters so much more than the amount you start with. Let's dive in. The biggest secret about investing is that it's not really about how much money you start with. It's about three key things: time, consistency, and building the right habits. Starting with $50 creates momentum. It gets you in the game and makes investing a real, tangible part of your life. And time is the magic ingredient that turns small, consistent contributions into a significant amount of money down the road. It's a concept called compounding, where your money starts earning money, and then that money earns even more money. The earlier you start, the more time you give your money to grow. So where should you put that first $50? Before you invest a single cent, make sure you have two things covered. First, a small emergency fund. This is cash set aside for unexpected expenses, so you don't have to sell your investments at a bad time. Second, try to pay off any high-interest debt, like credit card balances. The interest you're repaying on that debt is likely higher than any investment return you will get in the short term. Once that's handled, you have a few great options. You could contribute to your employer's 401k, especially if they offer a match that's free money. You could also open a Roth IRA, which is fantastic for beginners because your money grows completely tax-free. Or you could use a standard taxable brokerage account, which offers the most flexibility. Now, you might be wondering which platforms even let you start with such a small amount. The great news is that modern technology has made investing more accessible than ever. Many apps now allow you to buy fractional shares, meaning you can own a piece of an expensive stock without having to buy a whole share. They often have no account minimums and allow you to set up automatic deposits. When you're looking for a platform, focus on finding one with low fees, a simple and easy-to-use interface, and access to diversified funds. Many beginner-friendly platforms even offer educational tools to help you learn as you go. Okay, so you have your account set up. What should you actually invest in? For most beginners, the answer is simple: low-cost index funds or ETFs. Think of these as baskets that hold small pieces of hundreds or even thousands of different companies. This automatically diversifies your investment, which spreads out your risk. You aren't betting on just one company to succeed. What should you avoid? Stay away from day trading, chasing hot stock tips you see online, speculating on crypto, and complex strategies like options trading. These are fast ways to lose money. For beginners, slow and steady truly wins the race. The real key to turning that $50 into a serious nest egg is automation. Set up automatic transfers from your bank account to your investment account. It could be weekly or monthly. Even $10 a week is over $500 a year that you're putting to work. Whenever you get a pay raise or a bonus, commit to increasing your contribution, even if it's just by a little. And make sure you reinvest any dividends you earn. This creates a powerful, quiet cycle of growth that lets compounding work its magic in the background without you having to think about it. Of course, beginners often make a few common mistakes. The biggest one is waiting for the perfect time to invest. The truth is that time never comes. Another mistake is trying to get rich quick, which often leads to taking unnecessary risks. Panic selling when the market dips is another classic error. Markets go up and down, and long-term investors learn to ride out the waves. Finally, don't overcomplicate your portfolio or watch the market every single day. The best investors are often the most patient and hands-off. So what can that $50 really become? If you invest $50 today and then keep investing just $50 every month, over 30 years that could grow into tens of thousands of dollars. That's not because of luck or some secret strategy. It's the simple, powerful result of consistency and time. Your first investment doesn't need to be perfect, and it doesn't need to be huge. It just needs to happen. Take that first step today. For more simple, practical guides to building your wealth, make sure you subscribe to Financial Essentials. Thanks for watching, and I'll see you next time.